Hey, what's up guys? John here. Did you know California just quietly increased income taxes without telling really anyone? No one knows about this. This is going to be a huge shocker to real estate investors, house flippers, business owners, employees, entrepreneurs, and everyone in between. So if you're thinking about running a business, starting a business, maybe you own a business in California, it's something you should pay attention to. If you're a house flipper, you want to invest in real estate in California, this is also something you should pay very, very close attention to. Because I think what we're going to start to see is a very, very big softening in the real estate market in California. We're already starting to see small signs of this with pretty big price reductions across the board. Now even foreclosures that are starting to come out. We're starting to see some big changes. Even rents are softening in a big way in California. We're starting to see big changes. And what I think is going to happen is really going to be something that is going to change history. I think there's going to be massive opportunities to invest in real estate when all of this stuff starts really hitting the fan. And in this video, I'm going to walk you through exactly what's going on. Please hit the like button. When you hit the like button, YouTube's going to share this content to educate more people about what's really happening in California. I was a real estate agent in Beverly Hills for a decade, a real estate investor. I loved living in Los Angeles. I loved living in California. It was incredible. But it's just been getting harder and harder and harder for business owners and entrepreneurs over the years. And I think what we're going to start to see is more people leaving and going to other locations. Take a look at this. And also, if you need help fixing your credit, maybe you want to invest in real estate in 2023, 2024, when the prices soften. The best time to fix your credit is now, so you can get ahead of the curve. And maybe you see a great real estate investing opportunity, you have great credit, you're able to go out there and pounce on the deal. If you don't have great credit, maybe you missed on the opportunity. So if you need help fixing your credit, we'd love to help you at GreatCreditFast.com. That's GreatCreditFast.com. You can give us a call at 561-430-5900 for a free consultation. Take a look at this. California quietly raises state income tax rate to 14.4%. Now this is just state. If you are making $1 million a year hypothetically, and this 14.4% plus the 37% federal tax, you're paying almost 52% of your entire income just in taxes. And in expensive locations like California, what we're going to start to see is more people moving to places like Florida and Texas and Tennessee and Vegas and locations with 0% income taxes. I mean, California, before this increase, was still number one with highest taxes in the country. Now, they're still obviously number one, but by a landslide. Hawaii's 11%, New Jersey 10.75%, Oregon 9.9%, now California 14.4%. Last week, Governor Gavin Newsom signed legislation that implements the change in a recent op-ed by the Wall Street Journal. The writer wrote, in 2024, California's top marginal tax rate will increase to 14.4% from 13.3% for workers making more than $1 million. Now, a lot of people say, good, the rich, they deserve to pay more. But the reality is the rich, they usually employ people. They, bring job opportunities. They bring commerce. And when you tax the rich, what ultimately happens is that the rich never get hurt. It's always the middle class, the people that work for these companies, that end up really suffering the brunt of it. And so what I think is ultimately going to happen is we're just going to see more and more people leave. This making between $61,214 and $312,686 would still pay a 10.4% tax rate. 10.4%, still almost the highest in the country. So California's upper middle class would pay more than millionaires in almost every state. The bill, SB 951, is primarily designed to fund an expansion of the Golden State paid family leave benefit. Now, paid family leave, people have their opinions on this. I mean, a lot of people have not really had to work in California the last couple of years. And taking more from the economy that they're trying to make function to give to people to not work is probably not the best for a successful and operational economy. Right? It removes the existing $145,600 wage gap on the state's 11% employee payroll tax. Right now, employees are eligible for a 60 to 70% wage replacement for up to 8 weeks to care for a baby or an ailing family member. As of 2025, the majority of California workers will be allowed to take home between 70 and 90% of their normal wages, with low-income families eligible for even more. The marginal income tax bracket increases, opponents say, digging high earners who will not see much, if any, benefit the paid family leave expansion. Proponents, however, suggest the California existing program has fallen behind other states, and low-income workers are currently unable to take leave, leading to poor infant and maternal health, among other consequences. Now, look at what's happening here. You have the federal tax, 37% on someone making $1 million a year, even less than that. you can make 600K, 500K a year. You're still paying 37% plus the 14.4%. But here's how this whole thing kind of plays out. If you're making, let's just say, for this example, a business owner, I'm looking in the shoes of a business owner making, say, $1 million a year, and they would have to pay about $520,000 just in tax. And then the adjacent revenue, that maybe they're out there spending money, maybe they're supporting the local city, coffees, sandwiches, whatever they're doing. They're paying 9.5% on all the adjacent money, additional money that they're spending, right? So their real tax rate is probably somewhere around 55 to 60% of all the money that they're earning is going back to the government, right? It's a huge number. And now we're starting to see these new Los Angeles property tax increases, these new wealth transfers. So you're paying 4% new tax on deals between 5 and 10 million and 5.5% for transactions of 10 million and above. However, now what we're starting to see is, according to SoCal Gas, serves most of Southern California, prices are running about 5 times higher. So gas bills are 5 times higher than last January due to market forces, supply issues, colder than normal weather among the West Coast. So you have 5 times the utility costs. And so it's very fascinating to look at how this is impacting the real estate market. Now, if you look at, let's say, for example, this is USC. It's a very, very expensive market. Years ago, it was not expensive. It was actually pretty affordable. But I mean, look at this, $799. This is a foreclosure. Well, when were you seeing foreclosures in Los Angeles, right? Not often. You look at this here, $999. This was just price cut, $300,000 price reduction. $300,000 price reduction. This seller wants out. They bought this property for $852, right? $852. They spent a bunch of money fixing the property up. You can see it looks, relatively nice. It looks like they, just did, a flip, and maybe they spent 50, 100K. I don't know what it looked like before, right? But they carried the property for about 2 years, right? They carried the property for about 2 years, and now they're basically trying to get their money out. They're going to lose money on this deal, there's no doubt, after they factor in agent fees and commissions, right? It's not just this. Look at this property here. This is for sale $999. They just reduced the price $200,000, right? $1099 was listed $1,199. Now it's at $999. You're just starting to see more and more and more sellers trying to get out. I'll pick a random one. Let's look at this one. $1,199. This, let's see here, listed for sale. So they just listed this for sale. A lot of properties are starting to see these big price reductions, and I think what's happening here is people that bought over the last couple of years, they're trying to get their money out, and that's what I think is going to happen over the next year or so. We're just going to start to see more and more and more people. Like this one, it was listed for $1,049,000. Now it's at $950. They just dropped it another $100,000. We're going to start to see more and more and more sellers looking at the environment, the climate in Los Angeles, saying, okay, some of the highest taxes, gas bills are only going to likely be going up. There's still rent regulation through the eviction moratorium that's in place in Los Angeles, so rent's optional. I mean, this is a really, really challenging location for people to invest in real estate, and I think we're going to start to see this reflective of the prices as just the cost rise. Now, take a look at this to put this into context. Right now, if you're in California, you have a credit score of, say, 700, which is slightly better than the average credit score. The average credit score in America is a 699, right? Or 698. So 6.93% on a $500,000 loan, right? So now look at what you would have to make to be able to afford one of those examples. Let's just say $1 million home. $1 million home, you have to make an annual income of $300,000 a year, right? So basically $25,000 a month you have to make to live in a middle-class neighborhood in Los Angeles. $300,000 a year. You need to have $200,000 in cash as a down payment. Now, who can say that this is going to be sustainable? This is not, right? We are going to start to see huge, huge changes. Properties in this market, just south of Exposition, right here, these properties are selling for, 4 or 5 years ago, they were selling in the 400s, $400,000 range. Now you're starting to see the softening, but people, I think we're just going to see a small correction. When you're looking at the cost of buying one of these homes in this neighborhood, like the target buyer of anyone in these communities is someone making between $250,000 and $400,000 to live like in the inner city, right? This is going to be, I think, one of the biggest real estate corrections that we see is going to be in Los Angeles. So if you're thinking about investing in real estate, you're kind of like paying attention. Just wait a little bit longer. Wait for the utility bills to continue creeping up, the tax bills to start coming, the economy to start contracting, stock market, everything start to look a little bit more shaky. You're going to start to see more fear in this economy. And with fear is going to come opportunity. So if you're thinking about investing in real estate, come up with a really good game plan, cash to the bank, look for a distressed seller. There's going to be plenty of them, and build a really, really good strategy around this changing environment. Just wait, because big changes are coming to LA. Drop your comments below, hit the like button, subscribe here, and on my second channel, it's an interactive call-in show and a podcast. I will be buying in Los Angeles, even given the insanity, when there's peak and optimal fear. When everyone is desperate to get out, I'm going to start buying in Los Angeles, and looking forward to it. And yeah, I'm going to hopefully build something. So Los Angeles, probably a great place to invest when the insanity and the fear really hit. Just make sure you have a really good game plan and you're really paying attention to all of the potential loopholes and pitfalls that people could fall into, because there will be plenty of them in LA. Catch you guys in the next video. If you need help fixing your credit, GreatCreditFast.com. GreatCreditFast.com. My phone number is 561-430-5900, 561-430-5900.